Hello everyone. Welcome to Module 11, Lecture 3, in which we are going to deal with the forecasted balance sheet, or we can say it a projected balance sheet for the next year or the year beyond that, using percentage of sales method. As you have already discussed in the previous lecture about the different methods of forecasting balance sheet, we are taking up the percentage of sales method for this question solving problems. Moving ahead with the question number 1, in which we are given the different information, and you are given one more information to deal with, is the sales for the year 2023 amounts to rupees 10 lakh and are expected to increase by 20%. So we are going to use 10 lakh rupees, the sale of 2023, as a base, and then on the basis of the information provided, we will frame the projections to be used for the year 2024. Now, we start with the question. First, we calculation of each item as percentage of sales, which is 2023. First, we go with the liability, which is provided in the question also. Number 1 is share capital with the amount in thousands. We calculate percentage of sales. As we know that in the year 2023, the sales are rupees 10 lakhs. So we are going to make the projection on the basis of the same. So the share capital in the year 2023 is 80. If we calculate this in comparison to the 10 lakh rupees, we got 0.8%. Then the next provided is long-term loan, which is 50,000. We take this 50,000 divided by 10 lakh rupees into 100 is going to be 0.50%. Similarly, the trade payables, which was given 30,000, we calculated it comes to 0.30%. And then other current liabilities, which are given 5,000 rupees, they will come to 0.05%. So we calculated almost all the liabilities given in the question as well as the equity. Now we move towards the items which falls under the category of the assets. So first we take up the non-current assets as given in the question. The first is fixed assets, amounting to rupees 85,000 in comparison to 10 lakh. It comes to 0.85%. Then is stock 15,000, so it will be 0.15%. Then we have debtors 25,000 divided by 10 lakh rupees, which comes to percentage 0.25%. Then the cash again 25, so it will also be 0.25%. And the other current assets given in the question is of 15,000, so it will be 0.15%. So as we have computed all the figures on the basis of the base year sales, that was 10 lakh rupees, now we are going to go for the forecasting of the different items. So first we have the forecasted sale as given in the additional information, that our sales are going to be increased by 20%. So forecasted sale for 2024 would be 10 lakh into 20% of 10 lakh, it reaches the figure of 12 lakh rupees. Now, on the basis of this 12 lakh, we are going to forecast the balance sheet items one by one, or we can directly prepare the projected or the forecasted balance sheet. Forecasted balance sheet of the company. So I'm putting one more column for the calculation purpose and then for the final amount, which is our forecasted amount. Here we can put the particulars. Here we put the percentage of sales, and here we get the projected amount, which we will mention in thousands. So going for each and every information, first we have just computed that the share capital is going to be 0.80% of sales. So I'm taking first item, share capital, as given 0.80%. So we compute 0.80% of 12 lakh rupees, which is our latest sales, which is a forecasted one. We got the figure of 96,000. Then next is long-term loan. The percentage is 0.50. So we use 0.50 of 12 lakh, which comes to 60,000. Then next is trade payables or the creditors, which was 0.30%. It comes to 36,000. We put 36 over here, and then we have other current liabilities, which is 0.05% of 12 lakhs 6,000. Then the next is the total of the liability side, which comes to the total of these four items is 198, because the figure is in thousands. Now we go for the forecasting of the assets. In which we are given the first asset is non-current asset, which is the fixed assets, and its percentage was 0.85%. Now we calculate 0.85% of 12 lakh rupees. It comes to 102,000, 1,02,000. Then the stock is given 0.15% of 12 lakh. It comes to 18,000 rupees. Then next item is debtors, which was 0.25% of 12 lakh, comes to 30,000 rupees. And then the cash is also 0.25% of sales, which is again in 30,000 rupees. And the last is other current assets, as we just computed it would be 0.15%. So 0.15% of 12 lakh, it comes to rupees 18,000. So making the total of the asset side, we got the figure of 198. You can see the total of the liability side is equal to the total of the asset side. This is how you can prepare a projected balance sheet for the year 2024 using percentage of sales method. Moving ahead to the another question. With regards to the same projected balance sheet using the percentage of sales method, in this question, we are provided with two adjustments. One is with regards to the increase in sale by 25% for the year 2023, and the another adjustment is the company is expected to acquire additional machinery amounting to rupees 50,000 over and above the proportionate change in the value of plant and machinery. So going ahead, first we calculate percentage of sales for various items given for the year 2022 as provided in the question, one by one. As we have already discussed in the last lecture, that we can start with the current assets and current liabilities, then we can move with the other items to make the adjustment. So first we take up the sales in the year 2022, which is given rupees 6 lakh, and using this 6 lakh as a base, we are going to find out the percentage of sales of the different items provided. So here, first we take up the current assets and the current liabilities on the first hand. So first I'm taking up the current assets as given in the question. Then I'm finding out their percentage of sales. First item provided is stock in the balance sheet amounting to rupees 30,000. So we compare this 30,000 with the 6 lakh rupees. It comes to 5%. Then the debt is 45,000 rupees compared with 6 lakh. We got the figure of 7.5%. Then next is given cash, which is 55,000 to be divided by 6 lakh. It comes to 9.17%. And then we have bills receivable, which is again 45,000 divided by 6 lakh into 100 comes to 7.5%. So these are our current assets. Now we are going to find the percentage for our current liabilities, which is trade payable. Trade payable, the amount is given 30,000 compared with 6 lakh, 5%. Then is outstanding expenses, which is 10,000. It comes to 1.67%. Then we have bank overdraft, 15,000 rupees. It comes to 2.50%. So we already got all the current assets and current liabilities. Now we go for the next step, that is to find out the projected sales for the year 2023 and then finding out the various items for the year. So the projected sale for 2023 would be 25% increase in the previous year's sales. So our sales, which we can is the projected sales for the year 2023 would be 6 lakh plus 25% of 6 lakh, it comes to 7 lakh 50,000 rupees. Now we again go for the projection of the different items. Percentage of sales and the projected amount. As we just calculated that the stock is going to be the 5%. So here it would be 5% of 7,50,000, which comes to 37,500 rupees. Then we have the debtors, 7.5% of 7,50,000 comes to rupees 56,250. Then we have cash, 9.17% of 7,50,000. It comes to 68,775 rupees. Then we have bills receivable, 7.5% of 7,50,000, which comes to rupees 56,250. As we projected the current assets, now we project the current liabilities too. The current liabilities are trade payable as a 5% of 7,50,000 comes to 37,500. Then we have outstanding expenses, 1.67% of 7,50,000, which comes to 12,525 rupees. Then we have bank overdraft, 2.5% of 7,50,000. It comes to 18,750. So you can use this as a first step. Moving to next step is the fixed assets. As given in the question, you can see the plant and machinery is of rupees 1,20,000, and an additional information is provided that company is expected to acquire an additional machinery for rupees 50,000 over and above the proportionate change in the value of plant and machinery. So we find out that first, that proportional increase to sales is 25%. So there will be 25% increase in the value of plant also, which is 1,20,000. Now it will become 1,50,000. If we add 25% of 1,20,000 into the value of plant and machinery. So additional machinery acquired by the company is of rupees 50,000. So our total value of plant and machinery for the projection purpose would be rupees 2 lakhs. But there is another asset provided as building, as nothing is given with regard to the change in building. So we assume that building will remain fixed for our calculation purposes. So moving to the next part. Now we try to find out the projected balance sheet of the company. Projected balance sheet as on 31st March 2023. We again start with the liability sides. So our liabilities. In this question, you will mark one change. That in the first question, we proportionally raised the share capital also, but we are not going to do this here. As you know, it is not necessary that the capital will increase due to the increase in the sales of any business. So here we take share capital as it was provided in the question without making any change into the same as rupees 1 lakh. Then we have reserve and surplus 60,000 rupees. Next figure is of profit and loss account. Here, I want to mention one thing here. You know that the profit is given 75,000 rupees, which is against the sale of 6 lakh. If now the sales will go up to 7,50,000, there will be a proportional change in the net profit also. So if we take up this 75,000 plus change due to the enhanced sale, it will become 93,750 rupees. Moving ahead with the debentures. So we are taking it that there is no increase in debenture as mentioned in the question. We take the figure as a fixed. Then we have unsecured bonds of rupees 40,000. Then we have just calculated the trade payable 37,500. Then we have outstanding expenses 12,525 rupees. And then next we are given the bank overdraft, just computed 18,750. As you see that we have projected the different items of the liabilities and the equity as per the percentage of sales method. We got the total of the balance sheet of the liability side particularly, that comes to rupees 4,47,525. Now moving ahead, we will move for the computation of the different assets. In assets, we just calculated the value of plant and machinery 2 lakh rupees. Then we assume that the value of the building will remain same 1,20,000. We computed the change in the stock, that comes to 37,500. Debtors 56,250. Bills receivable with the same amount of the debtors 56,250. Then we have cash 68,775. If I calculate the total of the assets, it will be 5,38,775. You must be having one question in your mind, that why there is a difference between the value of the assets and liabilities. So let me tell you one thing. You can see that our assets are more than the liabilities, because our assets are 5,38,775, while our liabilities are just 4,47,525. We can see the difference of rupees 91,250. This excess of the amount can be assumed like to be financed through the issue of the new debt or the retained earning or the equity, but nothing is mentioned in the question, so we can assume it as a part of projected profit and loss. So you can see the projected profit that we computed in the question is coming to rupees 93,750. For you people, I am putting this figure. I took it from the projected profit in the projected balance sheet plus this difference of 91,250. We got the figure of 1,85,000. Now, if I put this 91,250 rupees here, I will get the same amount of 5,38,775 as a total of my liabilities, which is equal to the total of my assets. I hope you know what I have done. We just find out the difference between the assets and liabilities and took the new profit which we computed as a difference of 91,250 to be added to the projected profit of 93,750. So the total profit that we show in the projected balance sheet would be 1,85,000 rupees. So moving ahead with the question number 3, here you can see that you are provided with one information with regards to the sales, direct material cost, manufacturing expenses, office expenses, rent, depreciation, marketing expenses, interest paid, and the tax rate. Along with that, we also have a balance sheet particulars provided. These are the additional information for this particular question. So starting in the similar manner as we did in the projected income statement. So we are here to prepare projected income statement for the year 2023 first, then we make a projected balance sheet for the same. So starting with percentage of sales, that is 2022, the various items given in the income statement so that we can prepare the projected income statement first. We are given the direct material first information of rupees 2,50,000. Again we compute as percentage of sales. So it would be 2,50,000 divided by the sale amount of rupees 8 lakh. It comes to 31.25%. Manufacturing expenses 90,000. It will become 11.25% as per the sales ratio. Then we have the office expenses, which would be 8.13% of 8 lakhs. Then we have the rent, which is 1,44,000. So 1,44,000 in comparison to the sale of 8 lakh, it would be 18%. Then we have marketing expenses 60,000 rupees, which comes to 7.5%. You can see that we are not considering the depreciation and the interest paid and the taxes because we know they will not proportionately increase with the change in the sales. Now using this, we are first going to project the income statement, projected income statement for the year 2023. 2023, starting with the different items. Then we calculate the percentage of sales. You can see in the question that now the sales are expected to be rupees 10 lakh. So here we calculate the projected figure for 2023 when where sales are 10 lakh rupees. So computing each item again. First is direct material, 31.25% of 10 lakhs. It comes to 3,12,500. Then manufacturing expenses, 11.25% of 10 lakhs means 1,12,500 rupees. Then the next is office expenses, 8.13%. So it comes to rupees 81,300. It is just an approximate figure. So we have the rent, 18%, comes to rupees 1,80,000. Then we have the marketing expenses, 7.5% means it comes to rupees 75,000. Now we treat the depreciation. As you can see in the additional information, we are provided that depreciation will increase by 20% in the year 2023. So our new projected depreciation will be 20% of 80,000 plus 80,000, which comes to rupees 96,000. Then we have interest paid, which was given in the past year, 25,000. And we have an adjustment that it will increase by 10,000 rupees. So we add this 10,000 over here. So our projected interest will become rupees 35,000. Now we calculate the profit before tax, which would be 10 lakh of the sales, and deducting all the expenses. I just computed all these expenses, the projected one, including depreciation and interest paid. We reach the figure of 1,07,750 rupees. Now we compute the tax at the rate of 25%, which comes to 26,937 rupees and 50 paisa. So we are left with profit after tax, which is 80,812 rupees and 50 paisa. So this is our projected income for the year 2023. Now going for the projected balance sheet. As we can see that the sales has gone up from 8 lakh to 10 lakh rupees, showing an increase of almost 25%. So we can first calculate the sales growth, which is 10 lakh in current year, projected year, divided by the base year 8 lakh. So we reach the figure of 1.25 times, means I can say it is 25%. So now we are going to project the balance sheet using the different items of the year 2022, then estimating the figures for the year 2023. So the first item is the liability side we are going to compute. So our liabilities start with share capital. As you know, it was 4 lakh in the year 2022. So we take it as unchanged figure because it has no relation with the increase in sale. Next is accumulated reserve, which was 1 lakh, we can make the proportionate increase by 25%. 1 lakh plus 25% of 1 lakh. So we reach the figure of 1,25,000. Then we have profit and loss, which was given 64,500 in the year. You can see in the balance sheet also the figure of the profit and loss provided to us is 64,500, and we just computed the projected income statement and our profit falls to rupees 80,812 rupees and 50 paisa. So our new profit will be 64,500 plus 80,812 rupees 50 paisa, coming to 1,45,312 rupees and 50 paisa. Moving ahead, the next figure is of long-term loans, which was 2 lakh, up by 25%, comes to 2,50,000. Similarly, unsecured bonds from 1 lakh to 1,25,000. We are just adding up the 25% in each item. Then we have the creditors in the question, which is given 1,20,500 rupees. So the creditors 1,20,500, projecting the 25% change, it would be 1,50,625. Then going to next item, that is bills payable, which was given 1,35,000. Adding up the 25%, it reaches the figure of 1,68,750. Now we can compute the total of this side. This is 13,64,687 rupees and 50 paisa. Now we are going to project our assets. You can see in the adjustment that we are provided with one information that the company is planning to acquire additional machinery of rupees 50,000 over and above the proportionate change. So the machinery which was of rupees 5 lakh in the year 2022, in the year 2023 it would be 5 lakh plus 25%, which we have to add because of the change in the sales. It becomes 6,25,000 plus 50,000 that we acquired latest. So the total value of the projected machinery for the calculation of the balance sheet would be 6,75,000 rupees. Moving to the next item, that is our building, which was given 3 lakh rupees. Adding 25% into it, it would become 3,75,000. Then we have the stock of rupees 1 lakh, adding 25% will be 1,25,000. Then we have a figure of debtors, which was given 90,000. Now it will become 1,12,500. Then we have the cash of rupees 80,000, adding 25% will become 1 lakh rupees. And the bills receivable, which was given 50,000, will become 62,500. So now taking the total of the asset side, we find that the total of the assets would be 14,50,000. Again, you can see the difference of the assets and liabilities total. So we will resolve the same thing by using the difference of assets and liabilities, which is 14,50,000 total of the assets and 13,64,687 rupees 50 paisa for the liabilities. we got the difference of rupees 85,312 rupees 50 paisa. So already we have projected the profit and loss figure. So we can take it as bank overdraft with the amount of 85,312 rupees and 50 paisa. If you put this item on the liability side of the balance sheet, you would get the figure of 14,50,000. So your assets will become equal to the liabilities. With this, I come to an end of my lecture, and I hope now you will be in a position to prepare the projected balance sheets using the percentage of sales method. Thank you. Thank you so much for your kind attention. Thank you.